City streets passing by underneath stormy skies. Neon signs in the night, red and blue city lights, cargo trains rolling by. Once again, someone cries. Trains in winter rains, no going by, no going home. Trains across the plains and in the sky, a star alone. Every time it's the same. One more night, one more train. Everywhere empty roads. Where they go, no one knows. Trains in winter rains, no going by, no going home. Trains across the plains and in the sky, a star alone. Trains in winter rains, no going by, no going home. Trains across the plains and in the sky, a star alone. Trains in winter rains, no going by, no going home. Trains across the plains and in the sky, a star alone. Trains in winter rains, no going by, no going home. Trains across the plains and in the sky, a star alone.
We are here, folks. We're going to start in a minute or two and answer some questions today. Just give me a couple of minutes. We are here, though.
My time flies one step and we're on the moon. Next step into the stars. My time flies, baby, we could be there soon. A one-way ticket to Mars. My time flies, our man underneath the
Good afternoon. Good afternoon, everyone. And pretty music by Enya. And let's just, I'm a boomer. I'm a boomer. So, getting acclimated to YouTube and Zoom and Link and everything is a little different than what we had been doing. And hope you're all having a good day. For the folks that may be stopping by on YouTube, you might want to set your video definition to the optimum that you can get, the highest definition on YouTube. We do use Zoom. I am Bagadon at Stock Market Caddy. Today is yeah, thank you, Susan. It's Wednesday. Oh, yeah, I see. Yeah, thank you. So we said, yeah, the free webinar. Where's that line say it? Oh, I see. Yeah, I forgot to put in Wednesday. Oh, thank you. Maybe I should edit that. Free webinar. We'll make it, if I can do that. Wednesday. Maybe that'll change it. Thanks, Susie. In any case, for those that might be stopping by, again, I'm Bagadon at Stock Market Caddy. We're not making any specific recommendations here to buy or sell anything. We're not making any claims, at all. We're not. We are a mentoring site for those folks that are interested in trading the markets, maybe as a swing trader, maybe even as an investor. How do we define investor? I think anytime you're buying something and you intend on holding it for over a year, long term, 2, 3, 4, 5, maybe years, you plan on that. But it's still a trade. I presume at some point you want to realize some profits. Maybe those profits are coming from dividends, or maybe, sometimes you want it to be a capital gain where you sell it to, some other person. But even then, you might want to have some trading skill. You don't want to be buying NVIDIA when everyone else is buying NVIDIA. Maybe you classify yourself as a swing trader. You don't want to be in front of a screen all day, or maybe you don't have the time to do that. And you want to trade every few days or for a few weeks. You want trades to last that long. Maybe you want to put on some options, as we did this morning on the S&P as an example. And you want those to go out for a few weeks. That still is trading. By the way, if you are an investor, you're investing in something for years to come, probably don't want to be looking at it intraday. I wouldn't, there's no point. If you are a swing trader, few days, few weeks using options, I wouldn't be looking at those trades intraday either, unless it was within a day or two of when I wanted to exercise hopefully the profit or the loss. Now, if you want to watch, if you have the time, you have the risk capital, and you have the patience and the tenacity and the passion that you want to be trading the markets on an intraday basis, then we trade their futures because they're leveraged. We have access, market access. They're highly liquid, and we trade them using mechanics, using tools, and we trade them mechanically by hand, putting the orders in and out, and also by robot, what we call robot assisted trading. The reason why we do that is so that we can get away from the emotions of greed and fear. If you are making decisions based on, oh boy, I put that option on and man, I'm up $10,000. Oh, geez, I better take that money. Or geez, I was up $10,000. Now I'm only up $7,000. I better take that money. Or, I put a trade on, I put an option on, it cost me $8,000. Now I'm down, $2,000. You do need to be aware of your account and there are some parameters there that you can set either mechanically or robotically. But if you're making decisions day in and day out, week in, week out, and you're doing all those decisions purely on the money, it's going to drive you to drink. It just is. Or to weed, where you're going to be angry with the dog, and you don't want to be angry with the dogs. They're beautiful creatures, right? So you've got to, splash some cold water on your face, take a good hard look, at what you've been doing. Are you getting it done? Are you advancing the ball? The bar to entry here is very, very low, right? Anybody who can fund a brokerage account, which is just about everybody, um, you know, can fire it up and can anoint themselves a trader. That includes Davey Day Trader. Have you just seen his tweets, Dave Portnoy? Sounds like he's a hell of a gambler. I mean, he's done well for himself. He turned a gambling tip sheet in the Boston area, a rag, into a $300 million profit, and he's got multi-million dollar homes, and then he runs around most days tasting pizza. Have at it, but he calls himself Davey Day Trader, and then that just buy stock, it always comes back, that sort of thing. Good luck with him. I suppose, you got hundreds of millions, you can afford to, to lose a couple of million. But if you're want to learn how to trade as a business and not be beholden to Davey Day Trader, our members are not beholden to me. Okay, I'm not giving them a specific interpretation for them to do specific anything. We do something much more valuable. We give them an education and try to show them the tools that we have on a video view every night, and how to interpret those tools for themselves, and then also have these tools on their desktop. But it is learn to trade your game, not mine, not Davey Day Trader, not someone else, but trading your own game. And some people want to do that, and some people don't, right? I would say the majority of people don't, right? I mean, we have such a stark difference in our political season here, and it's hard to avoid it because it's in our face every day, every night now. And we have one party that wants to create jobs, supposedly, and then we have another party that wants to provide guaranteed basic income so that everybody can go to the beach and play hacky sack. I got to tell you, I think I think most people, probably most young people, probably maybe most 45-year-olds, I think they'd rather get a guaranteed basic income and go to the beach and play hacky sack and smoke some weed and have a good time. I think so. Um, so this is not these tools are not a get rich. I'm sorry. You're gonna have to work at it. You're gonna have to, set aside some time. You're gonna have to invest in a notebook and a pen, and you're gonna have to study, and you're gonna have to practice, and you're gonna have to also too. You have to, like to make decisions, right? I'm asked sometimes, like, what does it take? And I'm humbled by this because we've been doing this a long time, and I'm not trying to be preachy, and I'm not trying to say, look at me, look at me. I'm not. I'm very humbled by this. We have to come into the market every day, every week, deal with what we have. We don't get everything right. We don't. And we have to execute. And we have to make decisions. I make more decisions in a day, certainly in a week, than most people, financial decisions. And this, without question, I make more decisions, and our members probably make more decisions in a week than most people make in a year, maybe in 5 years, or maybe in a lifetime, honestly. Some people think that, they can just go to work and have so much money deducted and just have money thrown into the indices. And and when they go to retire, there's going to be a big bundle there, and that's what they're sold, right? They're sold, a pile of crap, right? I hope it works out. It does work out for some. It does. Um, and especially when we've been in a 35, 40-year bull market, in 1981, interest rates were at 20%. Interest rates, went all the way to zero. That was the time to be in stocks when interest rates were coming down. But now that we're in a regime where interest rates are elevated, we could be in a sideways market for the next 20 years. And you can say, oh, that's bullshit. Well, look at your charts, do a Google search, do a Bing search from 1966 to 1981, almost 20 years, 16 years. The S&P ended where it started. You know, and it's just called digestion. And if you're averaging in and putting money in there, you'll get out what you'll get out at that time. Of course, if you're a few years away from retirement and you get hit with a 50% drawdown or 50% hit because, some Bank of Japan decided to defend their currency, then you're going to get rocked. And if you haven't learned anything, how to manage your money and how to trade, you're gonna be at the mercy of Joe Bag of Donuts on CNBC, Becky Not Too Quick, Steve Eisman, he's a beauty, and you're gonna be running around and turning on market and turmoil and all that stuff. And I feel for you. I mean, it'll be a horrible thing. So, I I start some of these honestly with the discussion that I had with Susan in the early 2000s. Said, Susan, this is the most ridiculous thing I've ever seen. And we did quite well, right? We did a lot of the traditional things. We've been in the markets, Susan and I, since 1981. 1980, we graduated college in 1980, so we're older folks, and we got involved in the markets in 1981 and did the IBD and the VectorVest and all that, and we'd done very well. But after the early 2000s, I sat down with Susan. I said, Susan, this is the biggest crock of shit I've ever. I mean, it didn't make any sense to me. And sometimes, you can have the best educations in the world, and you got to rely on the little hairs on the back of your neck and that common sense. And Susan said to me, well, what do you mean, Don? I said, Susan, they're all lying. They're all lying. The politicians are lying. This is in the early 2000s, the politicians are lying, Wall Street's lying, the companies are lying. I mean, we were working for some of these very fine companies, right? But we knew, Susan knew, a lot of these people, a lot of the managers and stuff, claiming sales that weren't there. They were all lying, to juice their stock options. And I could tell you stories, which I'm not going to do online. But so Susan said, well, what do we do? I said, well, we got a choice. We can shop around and find ourselves a fiduciary, someone supposedly a little bit more interested in your performance than maybe a broker or broker. And maybe we get 2 or 3 of them and sprinkle it around and hope for the best. Or we can get educated and use this new technology that's coming out of the ground, this high speed. It's only going to get faster. It's going to get more sophisticated, and apply our savviness, apply your math skills, Susan, and apply our common sense and learn how to trade the market. And so it's like, well, what do you mean trade? Like day trade? We're going to be day traders? No, we're not even going to do that. No, that would be swing trading. We're going to trade intraday. What? Nobody can do that, right? Susan had all that stuff too, right? Nobody can do that, Don. Everyone tells us, that everybody who trades is a loser. You can't possibly time the markets and all of that. That's where we were too. And I said, I don't, let's have an intellectual discussion about that, Susie. And one of the questions that I asked, and maybe you want to ask yourself, I said, well, if we're only supposed to buy If we're only supposed to buy and hold for the long term and only sell when we're going to retire, I guess, and need the money for whatever, um, who's doing all the selling every day? Who was it who took the market down in 1987, Susie? 22% in a day. Who was it who took the market down in 1994? Who was it who sold the market in 1997? Who was it who sold the market in 2000 and took the NASDAQ down 90%? You might be asking, who was it who sold the market just in the last 10 days? Right? Does it matter? I don't know. Was it the carry trade? The reverse of the carry trade? Oh, that's what it was. It was the reverse of the carry trade. Maybe, maybe it wasn't. You know, um, so even today, the NASDAQ went down 90% in 2000, 90%. And today, these so-called wizards of smart, the Bernankes of the world, Janet Yellen, isn't she a peach? Isn't that a little gnome? I mean, talk about a bankrupt person, right? Here she is, head of the Fed, goes back into government, Secretary of the Treasury. She's on the payroll of the banks. They pay her for her white papers or academic white papers. They pay her 15, 20 grand to speak. That's such a scam, right? Medical industry's full of it too, by the way. It's a scam. The academics are trying to, get a piece of the pie. She's an idiot. um, very, very contemptuous of the government. I'm sorry if you work for the government, but she's not, well, she is government now, Secretary of the Treasury. But even these people today can't tell you why it is that the NASDAQ went down. You want to show something, I didn't expect to do this. I know you guys want to look at the market and everything today, and we're going to do that, but I want to show you something. I think you'll find this really interesting. I'm going to show you. This is nuts. I'm going to open it. I didn't expect to do this. You want to get a perspective on where we are, where you are, where your IRA is. And the thing of it is, the people that are in the market, the market you're in is like a big pool, right? And you're in this market with them. And if you think they have any idea and you're making a decision based on them, God love you. Let me, I'm going to put in a futures contract symbol. This is the ES. And I'm going to put this on a chart called the line break. I don't have enough time to fully explain how a line break, but it's quite a visual. And I'm going to put it on a monthly, and I'm going to go 30 years back. In fact, let's have more fun. Let's put it on the NQ. At NQ. Going back 30 years. It's going to take a minute or two to load. Maybe not even. We'll come back to it. So it really doesn't matter. This is what I said to Susie, so please don't feel as though I'm talking at you. And I'm not trying to suggest to you or to anyone that you should do this or you should not do. You got to make your own decisions, right? You got to make your own decisions, even in the market. We're just here for those folks that have an interest and say, hey, if this resonates with you, you know what? I think I'll give it a go. I think I'll try. But going back to the decision part of things, why most people fail and why we don't have, like 10,000 people listening to us, because you have to be able to make decisions, and most people don't, right? Most people don't. They don't want to make any decisions. What's for dinner tonight, honey? They just don't want to make any decisions. Also, it's said that, the market doesn't like uncertainty. And as traders, that's ridiculous because we love uncertainty. I love uncertainty. Most people hate uncertainty. They want certainty. They want, they want what they want, but they don't want uncertainty. They don't, and I was in a profession that was pretty damn uncertain. I mean, our heads were on the chopping block, um, from month to month. And I did it for years. We won't talk about what that was. It doesn't matter. It wasn't from Wall Street, but most people couldn't, and we were very well compensated, but most people, that's not comfortable. They want to be comfortable. If you can learn to enjoy making decisions, if you can learn to be comfortable with uncertainty, it's actually very, very liberating. It really is. Almost meditative. You have to think about it. But as a trader, and either you'll get there or you won't. And we can show you all the tools and we can give you the education. We can make you aware, but you're going to have to either adapt or not. Um, let's look at this chart. Oh, it's still populating. Dang it. All right, I wanted to show you something, but it'll take a minute. It's going back almost 30 years. We'll look at it. So does it really, really matter that the market, you're looking up here, man, I wish I knew to sell up here. I could have sold, I could have got a put on up at, 5,600, 5,650. And we got puts up there for late September and October. We got them in here. We actually put some more on today. And over here, and you can do this until the cows come home. You can say, man, I wish I bought here and took it up to there. If I got some calls and, honey, we could have made a killing. Yeah, you could have. You could have. But how is it, and why? How do you determine whether or not, I mean, you could have bought here. Let's just look at this, right? You could have bought here or here or here and here or here, and wash your ass. How is it you knew to buy down here? Then if you bought here and bought here and bought here and bought here, yeah, you're a rock star. You're a rock star. But then you come over here with all the money you bought, and then you buy with Davey Day Trader, and you do okay for a little bit, and then you get killed, and then you do okay for a little, and then you get killed, and you do a little bit okay, and you get killed. And then you get really, really killed. Oh man. And then you get short in the hole and you get your head ripped off. I'm like, oh, this market's rigged. I can't do it. Oh man, we're going up. I better start listening to CNBC and the economics and all that. And all of a sudden you're going to get killed again. And then you start looking for reasons, and it is a parlor game. I mean, we had some of those discussions. It's interesting about the carry trade and stuff. It is a little interesting. And of course, the Bank of Japan come out last night and say, hey, we're not going to do that again. Hey, everybody cheers. It is going to matter because the sell-off may or may not have been as a result of the reverse carry trade. It may not have been. Maybe it is. I don't know. Maybe it was something else. But the point is that when markets sell off, does it really matter why? Does it really matter? I mean, and people can't agree. People can't agree on anything. So that's why we say it's a parlor game. The only thing that matters, are you able to extract cash flow, or are you able to protect your investments, and are you able to move the ball forward? It's all that matters, right? I mean, to me, it does me no good to have unrealized profits where I call my broker every day and my telebroker. Okay, hey, the account's at such and such and such and such. Okay, all right, good. All right, man, I feel rich. Whew, I got 10 more years to go. All right, the account's at such and I feel, and then and there are people that do this 2-3 times a day. Oh, the account's down, honey. Oh, it's down, honey. I mean, terrible way to go. Talk about anxiety, right? Awful way to go. Let me show you something here. You're looking at this. This is a price chart on the S&P. Now, I'm not going to get all tied up into this and get you all tied up into knots on this, but I'm going to show you something very simple. And in real estate, what is it they say about real estate? I don't know why my markings go away. Every time I click on something at Zoom, they go away. I won't take the time to write it out. They say location, 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 right? And it's true, right? I mean, don't buy your house in the right location, you're probably not going to be in a good place when you want to go to sell it, maybe. In the market, or any market, for us as traders, it's price, price, and price. Volume doesn't matter. I'm sorry. I know the volume profile guys. They look nice. They look pretty. You can get the volume at price guys, and I can weave a whole bullshit story about, well, there's a lot of volume up here, so there's overhead resistance, or there's not any volume in here. I'm going to blow through it. And sometimes you can put too much on your charts and just get paralysis by analysis, but volume to us doesn't matter. We don't use volume at all. We don't use volume at price to speak of. I mean, there are places you might be able to use it a little bit, but we don't. We don't use stochastics. We don't use MACDs or moving averages to speak of, because they lag, right? In order to calculate an average, you got to be looking in the rear view mirror. And the rear view mirror has nothing to do with where you're going forward. It just doesn't, to speak of. What you want to be looking at maybe is the divergence and learn how to interpret that. But I just want to show you something. This happens to be a classic Renko chart, and these are called little bricks. They call them bricks. And this Renko chart is actually set at 17. Now, one of the biggest mistakes people make in using price charts, and there's no time. We can see the time below, or we can click on this and see where it's recorded, but the chart is not time dependent. The time charts that you're using are time dependent, and they can actually distort the price action. So if you're learning how to use candles and you just bought the $100 book from Steve Nissan, I'd probably sell it, because you're trying to learn something that was popularized like in 1970s, in the early 80s, reading candle charts. It's kind of nonsense. Unless you're combining it with 3 or 4 other things, which we do by computer, and I'll show you some of that before we leave today. And I better get going here so I can show you. I didn't expect I have kind of an idea where I want to go each day, but when we do these, but I want to show you each brick. Everything, this tool up here you might favor the long side, is being populated not by me. I didn't write that. The computer wrote that. And this one here that says under accumulation, I didn't write that either. The computer wrote that. I just want you to know that. These things here, we call those the ball markers, and I didn't draw those. The computer drew those. And they are the swing points. And then these little green dots and the little red dots, we call those the C points, and I didn't put those in there. The computer put those in there. The only thing that I drew in here was mapping out some of the Fibonacci's, and we have tools that can map out Fibonacci's as well, right? In this little target zone, we mapped it out. That's for our option work. And then this value over here, that I didn't do that either. It's telling us how much each brick is worth based on how many points are in there. $850 a brick. If you're trading a mini, if you're trading a micro, then they're only $85. If you're trading 10 minis, then they're $8,500, right? So all of this is scalable, depending upon, how much experience you have, how big is your account, and how much you're prepared to play for. But I just want to show you something. Let me try to widen this out. There goes my writing again. All right, so I'm going to just make these bricks a little bigger here so you can see them. And I'm just going to pick a spot over here. I'm just going to pick over here. This little C point does not get populated until this brick this one here, until this one finishes. So let me show you. Let me get a marker. There it is. Get a little marker. So this one right here. Oops, that's black. I can't see it. I'll get a green one. See this one here? This doesn't get populated by the computer until this brick right here finishes. So the earliest you could get in was right there. Right there. Right? Can you see it? I'm not very good here. That mouse. That's the earliest place you could have get in. And this little red one, if you wanted to short, the earliest place you could have got short was right here. Right there. You could have got in off of that. Now, I don't have time, and my members would not be happy if I explained to you how and why those C points are getting drawn. So I'm not going to do that, right? But as members, you get to see it on a video at night, and as an annual member, you get them on your desktop. Now, each brick is $850. So just stay with me for a minute. Could you, I'm going to ask you a question, and maybe somebody can keep score and count. We get somebody that count. I don't know, Susie, can you count? I'll try to count them with my fingers. I'll try, you know what? I'll try to write them down. Or I'll put a hash mark on the screen. If you bought this brick, you could have bought right here, and let's say you sold it right here. One brick. Could you have done that? Yes. One. Oop. Let's just do we're going to do long and shorts. So I'll just put in a hash mark. One. And right here, could you have got short here and played for one brick? Two. Could you have got long here and played for one brick? Three. That's three. Could you have gotten long here and played for one brick? There's four. Could you have done it here? Five. Could you have done it here? Right here. Six. Could you have done it here? Seven. Could you have done it here? Eight. Could you have done it here? Nine. Could you have done it here? 10. Could you have done it here? 11. Could you have done it here? 12. Could you have done it up here? There is, yep, you could have. 13. Could you have done it here? 14. Could you have done it here? 15. Hey, boring. 16. 17. 18. 19. 20. And let's just crunch it down. Oops, I gotta restore it. Oh, I just lost all my thing. It goes on. I think we were at 20 down here, 21, 22, 23, 24, 25, 26, 27, 27 in a row. 27 times 850. Well, how much is that? I'm getting out my calculator. $27 times 850. $22,950. If you just played for the one brick, no stories, no, yen carry trade, just price action. Get in, get out. Now that could be happening at night. It's open overnight. It's over time, right? It's over a period of time. Let me crunch this back down. It depends upon what you want to do and how you want to do it and what you're following. But, that would be like, and it's fine. It'd be like playing golf with a 9-iron. I mean, you can certainly do it. What we've drawn in here, though, we got short up here because when we went to the swing machine that y'all have seen on a daily basis, we were in euphoria. And I'll show you in a moment. When we were at 5,600 in 5,650 and 5,700, the S&P was in euphoria. In the VIX was in panic. We sell. And we did it for months out because it was going to take a little while before the sheep wake up, because they think it's just going to keep on keeping on. They think it's going to last forever. And that's when we put on our options. And then we break, we come down, and then we get the little bounce, and they get sucked in. Now, they only know to buy the dip, so they buy the dip. Dave Portnoy bought the dip, and then he got his ass handed to him. Then he bought the dip. He's going to get his ass handed to him again, because something has dramatically changed here. And that's where we drew in the Fibonacci's. This is the obvious high. This is the most recent obvious low. That is the focal point. You draw a Fibonacci from here to the focal point, and most things retrace 50%, which was right here, which would be 54.11. So when we started to see these little C-point longs, say, okay, we're going to bounce. So we put our hedges on, but it's just the bounce because the market has dramatically changed direction. And this is what we review in the Q School, so you'll be able to see this. Sometimes folks watch too many or see too much, and they get a case of vertigo. This one, we started up, we took out these swings, but you notice it got rejected again, and down it comes again. So what we do is we draw another Fibonacci retracement from here down to the focal point. And here's the other 50%. So when we started coming off, we put this up here between these two. That's the bounce zone. We expect the market to bounce. That's where Dave Portnoy is going to buy. That's where we're going to sell again. Because the other piece that we see is this is the A point down to the focal point of B. And this focal point is going to have to get tested again. It's going to have to do it. And then if we do turn, now, if we bounce through here, we might cover our positions. We might begin to cover some, but not likely that we're even going to do that. We don't think we're even going to get in here. I kind of wish we would, because I'd get even more short. On a position basis, not intraday, position basis. So you have to be very, very patient. You got to define your risk, and you need to do options. But if we reject this and we come back down here and we break this level, then where are we going? Well, we've drawn a Fibonacci from here. This is a Fibonacci, not a retracement, but an extension from here to the focal point to what could be the C point. We don't know yet. And down here, we can tell you this is our target zone, 4,600. Like, this is be very likely. This is more, probably, 4,600 and then maybe 44. This is where we would want to be closing out our puts. Now, I can tell you right now, and we did do this, and we have members here listening. We put on for our members as an example, but we do this also. We have other accounts at 5,600. That option still has another 30 days on it. And that option cost, when we put it on up here, when everyone was, yelling, that's when you want to be selling, for $8,100. Today, that option is a little bit off of its high water mark, but it's up 20,000. If we go down here, from 5,600, it's going, before the expiration, we put at risk 8,100, 5,600 to 5,000. I mean, that option will be worth, if we get back down to 50, it'll be at expiration, be worth close to 60,000. I mean, it's going to be a very, very big payday. Now you can do them on the SPY, the individual, which is 1/10 the size. But this is where we think we are. and we do think that we're going to have to come back down and test this out. I don't know if it's the yen carry trade. I don't know what it is. I don't really give a shit what it is, right? I don't care. I just assume that Davey Day Trader is much smarter than me, and everyone else is. So I'm just the most ignorant person in the room, and I just got to track their money flow. And when he starts to lose his ass, I know he may not admit it online, but he'll start selling. And if I can track him and everyone else's, billions, then I should be just fine. I can get in and get out my cash flow. That makes sense. It really is. All right. So you want to see some other things. I know what you want to see. You want to see, did this populate? Oh, it did. Oh, this is going to be fun. Oh, I see what I did. Why it took so long. Oh, I didn't mean to do this. I meant to put it on a daily. I thought I did. This is a tick count. I thought I put this bugger. Oh, I'm sorry. I want it on a monthly. I messed up. And 30, I want this to go back 30 years. That's what took so long. I want you to see something. This will be worth the, all right, this is great. This is beautiful. I love this. All right, let me show you. This is a hoot. Now, I don't have time to explain this chart to you, but how it works, but it's called a three-line break chart. And this is on a monthly basis. And this goes back 30 years. 30 years. And let's see here. Yeah, so we don't even see the .com. Did I not go back far enough? It doesn't even show the .com. Is it crop? It may be cropping off because NASDAQ was here. I don't see. Yeah, maybe it is. It is. Yeah. All right. So this is, do you see this? This here? That is the .com crash. Isn't that awful? That was the .com. How it was. I mean, a lot of people have died from there. They were close to retirement. I mean, they had all the dreams and aspirations that you have when they were here. And it went down in 9 months, it went down 90%. And then from 2003 to 2008, we didn't do anything. And then do you see this little move here? Oh, look at that. Oh my God. Do you see that? That was the reset. That was the depression. That was worse than 1929. That's the 2008 debacle. That was the worst thing in the world, right? Right here. What a bear market. Now we're up here. What happened here? Do you know what happened? Bernanke, who is fly fishing in Tennessee, he was one of the academic stooges. He got rich and then he got the hell out of Dodge. They rigged the game. They rigged the game. The markets lifted off. We could drill down right down from the month to the week to the day to the hour. On March 6th of 2009 at 3 o'clock in the afternoon, all the markets took off. Why? Well, they changed the rules on what the banks had to mark to market. Your accounts have to mark to market every minute of every day. The banks, those rules got changed. And the Federal Reserve, the bank of last resort, said we're going to pump liquidity into the market. Now, they don't technically print money, but they do something even better. The government issues bonds when they spend. The Federal Reserve buys those bonds. So that monetizes the debt. They said, well, that's what we're going to do. And we're going to pump liquidity into the market. So, by the way, I don't know if you know this, but back in 2008, Oprah Winfrey, Bill Gates, and the rest of them, and Spielberg, they all met in Chicago, all the billionaires. You didn't get the phone call. I didn't get the phone call. They were all scared out of their freaking minds. They thought they were all going to have to live with us back here. And they explained to them what was going to happen and told them, keep your money in the market. And we're also going to repress and lock down interest rates and force the sheep into the market. And that's what they did. And they launched, and that was QE1. This is QE2 on a monthly basis. This is QE3. This is QE4. This was Operation Twist. They bought so many bonds, they couldn't buy any more short-term bonds, so they had to exchange them with long-term bonds. They did Operation Twist, and we lit up again. There was another QE, and do you see what this is? You know what that was? That's COVID. And that is what screwed up the game. Because they did it again, but this time they then told everybody to stay home and we're going to send you money. And they did. And that's what created, here they created the inflation of assets, but most people don't own any assets unless you're a billionaire, you know, or us, but we're not billionaires. But most people don't. But here they gave it to the people. And that's what created the inflation. This is where we are. Now, this is an active bar. We may go back up to the highs. I think not. I don't have enough time. There's so much more that I'd like to be able to show you. But let me get the marker. The anatomy of a bubble is that we do just what we've done here. And then it will break. And she'll come down and do something like this. And then all the sheeple who never bought anything, they buy in here. And then she rolls. And she does that. And if you don't think so, I could put in Bitcoin. By the way, these are all my little markers from before all those winning trades. But that is the anatomy of a bubble. And if you want me to put in Bitcoin, I can. And you can see how a bubble builds and then how it wipes out. And now Bitcoin doesn't go back 30 years, and we won't use monthly, we'll use weekly because it just hasn't been around. We'll go 10 years back and you'll get an idea of what it looks like. So this is when, this is actually 19, right? 2019, then the ramp, then the, and that's then the crash out. And this is what it's doing right now. She's going back down, in my view, just technically. But you know what? Everyone can believe what they want to believe. I can tell you, I don't have our wealth in it. No. And that's kind of what it does. But let's leave that. And let's go back, and show you a few things. We'll go back to our radar. I'm sorry. We don't have time to show you everything as we did on Monday. If you haven't seen our live presentation from Monday, you get a better idea. So you can see we're actually kind of turning down. So as we approached in here, we started to put more puts on this morning. And, we wanted it to get up there. We're bearish, and we were cheering it on. I mean, not that it makes any difference. We would have loved for the S&P to get up to 5,400. We need to come down. Now, we think yesterday or last night, it spoke volumes because it did take out that swing point. But she still made new highs. She's got to come down, take out that swing, and then we could be down in here, and then it could be Katie by the door. By the way, Scott sent me the explanation. Thank you, Scott, for what Katie by the door means. You can Google it. Let's go look at Swing Machine. While all this is going on, this is intraday, right? So that was a little longer term view, but we trade intraday. Here's the 5 minute. All right, so this 5 minutes after. So here's the VIX, and it went long at 12:05. 12:05. We'll stay with the 5 minute. The 5 minute ES went short at 11.50. If you took that trade with 1 mini, you're up $1,000. Now, you got to know what hat you're wearing. Am I a short-term trader, an intraday trader? Am I investing? You got to define that, and we help you think that through and how it all works together. Because we do everything, right? We have long-term stuff. We have midterm stuff. We don't have a lot of long-term stuff anymore. We got other stuff. But here's the NASDAQ at 11.45. There's $2,000. How much money does it take to put on this trade? About $1,800, and you're up $1,000. This one here, this is the NQ. At 11:45, it's only 12:52, so it's only been an hour. How much money did it take? 1950, basically 2000. You're up 100% in an hour. In an hour. And people are putting, hundreds of thousands of dollars into Bitcoin because it's gonna, double or triple in the next, 20 years. I don't know. I mean, this just doesn't make any sense to me. But again, you got to like to make decisions. You got to be able to live with uncertainty. You got to be able to, this is not what you're hearing from media. This is not, nothing traditional about anything of this, right? If you wanted to trade the 1 minute, 11:15, get in earlier, you're up 2,500, 12:38, you're up 1,800 at the Russell. I mean, you can see these are the trades in the Dow. This is intraday. Now, later today, when we will have to say goodbye shortly. If the market comes back, we will see it. Our members will see it. And guess what? They will play it to the long side and they'll extract cash flow. That's our job. Our job is to extract cash flow. If you have a market, going back to where we started with this, if you have a market where all you can do is buy, you don't have a market. You don't have a market. All you have is boom and bust. You must have speculators and people that sell. Otherwise, everyone would put their money into the S&P. It would go to, 500,000. And then everyone, the baby boom would go to retire and it would go to zero because everybody would be getting out at the same time. But they just don't want you selling. They need you in. Davy Day Trader needs you to put your money in so he can get his ass out. It's very, and plus he doesn't know his ass from the hole in the ground when it comes to trading. He just doesn't. He doesn't know what he doesn't know. But yeah, people will follow that. Yeah, Davy Day Trader says, buy, buy, buy. And, and that's what it is. And then we come back, the bar to admission here, anybody who has money can open up a brokerage. Anybody who can fog a mirror can, anoint themselves a trader. I'm happy to plug any equity in, any market in. I'm happy to answer any of your questions. And I'm happy to show you any of our tools at the bottom. I talked a lot. I guess I digressed and I apologize. Let's show you a few things. This is our Nicholas timing model. You saw this on Monday, but it went long the VIX on the 1st. And it went short. Now on Monday, I think this was up to 75,000. It's a big trade, but it's still short and it's up 43,000. If you're making decisions to buy or sell, again, off the money, you're trading emotions, even here. If you're doing that, the likelihood is that you just don't understand yet how a trader trades and how his mentality is. But also you're probably trading too big. You're trading too big. You're trying to hit the long ball and you're riding your emotions. We're going to teach you not to do that and how to build incrementally. It's kind of like a graduated, when we learned how to ski, we learned how to ski on short skis. You would go to the bunny slope and they'd give you like little short skis and you'd ski with the kids. Susie and I in college. And then after a couple of hours, you'd go back in and they'd give you a little longer ski. By the afternoon, you had skis that were full length. And then the next day you could go ski the mountain a little bit, maybe not the moguls, but you had full skis. We can't do it in a day. We can't do it in an hour. We spend 3 weeks with you. It probably should be longer, but at least it's 3 weeks. And try to get you, pointed in the right direction. in a different way to think about it. But this is what our members are looking at. And monthly members, they get to see this signal go. Let's see, here's the fear gauge. We were risk off 10 days ago. We're still risk off. We're still risk off. They were panic fear the other day, and they come in and they hose everybody down. Oh, it's just a buying opportunity. That's where all the confusion gets in, and all the emotion, and just stay away from it. Don't even listen to it. It's terrible. But this tool is telling us it's still risk off. If you're putting any longs on, they should only be hedges to your short positions. Skew, very, very elevated. That tells us a lot. It tells us that the big money, that they're still very defensive. We can see the yield curve that the economy is stalling. It's been this way for almost a year and a half. But it takes, they lie, right? If you're listening to Austin's Goolsbee the other day, the University of Chicago, the negative yield curve has been negative for like 2 years now. And actually he was using the 2-year and the 10. It's actually the 90 and the 10-year you want to use. And what he doesn't tell you is, he doesn't know. He probably doesn't know. He's not a trader. He's an economist at the University of Chicago. Probably a brilliant guy, with economic models, but they're not going to make you any money. And he's going to be the first one, to get paid for papers to do this and do that, make a buck. But that are always conducive to the banks, always conducive to people sending the banks their money. They don't want you doing this. I mean, how else are they going to make their money? If you do this, then you don't need them. But the yield curve, when it goes negative, it takes about 15 to 16 months to manifest the recession. So it went negative in November 9th of 2022. So we are like a year and a half. We're out there. We think we're in recession right now. And by the time the media is reporting on it and the market's blowing down, we may be coming out, but don't think for a moment that the market is obligated to go back to the highs. You saw the extremes that we just showed you. The extremes. The NASDAQ, that it fell that little bit, right? It went from 5,000 to 1,000, and then it took 10 years to get back to 5,000. So the NASDAQ's at 21,000. Could the NASDAQ fall to 10,000 and be 50%? That'd be normal. It could. And it could take 10 years to get back there. Now, if you own individual stocks in the NASDAQ, they may never get back there. They may go out of business. We don't have the same stocks that we had in 1999. Now, if you're invested in the indexes, yeah, they reshuffle that, they rebalance that. Don't you notice, like, they never say anything is sell, right? They say we're rebalancing. They're selling the shit. They got to keep the indices, moving around and attracting new money. So they rebalance. They sell the crap, but you're not supposed to sell the crap. They sell you the crap. They stuff it in your IRA accounts, and then you get stuck with it. We look at, here is the sentiment gauge. Look where we are. The market's very balanced, but it's very ugly right now. The VIX, we got a score of 80. That's not good. That's not good. And the market is at 20. It's balanced, but the bear is he's still growling. This is not the place to be. Now, when the VIX got into euphoria and the market was in panic the other day, yeah, we came in and we put on some hedges. We put on a few longs, some hedges on our short position, but we're going to take those hedges off. Davey day traders, he's going to buy, and then pound the green hammer and get everybody sucked in, and they're gonna lose their ass. But these are the tools, or some of the tools, right, to give you a view. This tool, let's look at the Pebble Beach. Now, this is how we do this, right? This is a trade generator scanning 500 stocks. And check this out. I don't know what stock that is. It's Fortinet. We got a buy signal on Fortinet. Now, it's possible that it gapped, but at 56.75. If you had put this trade purse is calculating $10,000. If you had put $10,000 in there, you got 2,300. Now let's look at it. Let's get it on the chart. Okay, it did gap up. So you couldn't have got 56. 56 was down here. So it did gap up, but you could have bought it here. Still would have been a nice trade. So stocks gap up and down. But these others, let's look at Devon. This Devon Energy. You could have bought that one this morning off of here at 42.60. Actually, yeah, the entry price 42.16. We're trading at 43.85. If you had put $10,000 in, you're up 400. If you had bought a call, you're looking good. These are also sell signals. Notice we've got this is the label row. How many signals have we got? We got 15. We're profitable in all but 2. You know, I'm not scanning around looking at chart to chart. I'm certainly not listening to CNBC. I'm not subscribing to anyone else. Our members aren't looking for me to hand them the fish. They got the tool on their desktop. You want to put the NASDAQ in here? You want to put the Russell 2000 in here? Go for it. Go for it. You know, but you need to know. Let's see. Kind of moving around here. We can go to this is the only place that we will use moving averages. This tool here. Maybe on Friday we'll show you how we work on this. But if I want to see what stocks are, it happens to be Fortinet. That little thing is racing. Axion. These are the stocks racing percentages up over their 5-day moving average. And we can get a very unique, don't pay attention to this. This has to be loaded. We'll do it on Friday. It isn't loaded. It's not 10%. But, and we tell you, the other thing is not only we tell you what these tools are and how we built them, but how do you use them, you know, which is much more valuable. And then as well, if you want to see the stocks that are absolutely getting killed, are these stocks. Look at Airbnb. You know, what does that tell you? They're not doing so good. What about all those people that leveraged up? You know, the banks told them their homes, you know, up in Boston, a 1,900 square foot home, the average price is $740,000. 740. I think 710, something like that. 700, over 700,000 for a 1,900 square foot house, and some of those houses are 100 years old. And so the banks tell them that. And so they borrow against that, and then they go get another house like in Cape May or Cape Cod or someplace else, and they do it all over the country. You know, we got it here in Florida, same thing. They're not as inflated. You know, let's go get a house, another house over in St. Pete, and we'll get in the Airbnb business, and we'll rent it out. Airbnb, it's down 14% today. Do you know? You notice? You know, and we like to do that. We've been renting houses to go on vacation before there was an Airbnb. When Susie and I started in Miami, we used to call the first place we went was Maggie Valley up in North Carolina. We didn't have an internet. This was in the 80s. I'm like, Susie, I don't want to stay in a hotel. We stay in a hotel on business all the time. Well, where the hell are we going to stay, Don? I'm going to call a realtor up in North Carolina and ask them to find a house that we can rent. Little did I know, I guess I should have started Airbnb, but I didn't have the internet. We have never, other than on, well, even on business, Susan and I have never stayed, virtually never, on the less than one hand, on vacation, ever stayed in a hotel. I've never, in Miami, when we got started, put money in a bank. I think it was like for like 2 or 3 months. I never put money in banks. Always in brokerages. We had IRA accounts before we had our furniture. This is like, what the hell are we doing? We don't have a den set. What do you mean you're going to get an IRA? What's an IRA? We've been doing this a while. And this is how we do it. This is how we do it dynamically. It's very, very independent. And for those of you that want to trade options, look at this tool. You know, you don't, I don't want to smash anybody, but there's a lot of option, stuff out there. Nobody has this. This is the SMC Options Defined Risk Club Selector. Watch. This tells us all the stocks over here that we should be looking to buy. And it also tells us on a 30 to 45 day level what type of defined risk option we might want to consider. And it's not all of them, but this is where we get them. That's where we get them. And so when we see Tesla or Apple, in fact, here's Apple. Now this would have been up there last night. So do you see this? You may even see you see the little vignette here. There's a little vignette. It's moved up. So we'll scan through here. So our members last night, either on their desktop, annual members or monthly members would have seen this. And they would have said, oh, there's Apple. Put credit spread. Okay. Do you know how to do a put credit spread? Do you know the difference between a credit spread and a debit spread? You need to know. Do you, and now you still have some choice where you place it in relation to the delta, and we teach you that. He just had a nice day. If you put that put credit spread on at the end of the day yesterday and Apple's up $4 or $5, you're in good shape. Well, now they're not all, but again, with options, you just got to get, hit the side of the barn. That's where we get them. If you want on the dark side, last night, this is telling us if we should buy a put, should it be a debit spread, should we sell a call credit spread? Again, you get to, now you can override this, you can configure them whatever way you want if you got more option skill, and you might, but where you place them in relation to the delta is going to be up to you too. But we discussed that with you during the queue. And then if you want iron condors, you just scroll here, and here are all the stocks today that represent where the market is and where they are, the best iron condors. And they show up on both sides of the ball because iron condors are a neutral strategy. And then we even can come here and we can get the expected move of the ETFs or the stocks over X number of days. As a taste, this is just a taste, a glimpse of what our members get on a video view every night and also on their desktop as an annual member. And you get you get a lot. And we can come back here to the Forward Tees, and you want to know what is Swing Machine doing, and we do too. We keep an ever-present view. So right when we came on, I didn't have it up, I'm sorry, but we're not doing this to hand out the fish, right? If you were a member, you would have had it at 1150, and you more than doubled your money. 1800 to 1900. 1800 it would have been the cost of the trade. You're up 1900. You want to take your money, you can. The NQ, it's now 33. And I want you to take a picture of this. Go ahead and take a picture. Right? We didn't get in there. Right? But snap a picture. Write the date down. Now don't trade off of this. Right. That's what everyone else is doing. And then trying to say, we got it right. We want you to learn, because the market's going to do whatever it's going to do down here. And you want to be, we have a member, Chris, in Jacksonville, and, he's the one who told me back on July 9th, but Don, the yen is bottoming. Ooh, I see it. I missed it. But he brought it to my attention. He's got the same, it's bottoming. I'm getting long the yen. And then we had a little discussion. I'm back on July 9th. Chris, what do you think? If the yen rallies, what's going to happen to bonds? What's going to happen to the market? Well, if that yen really rallies, we're probably going to get a sell-off. Ah, beautiful. And let me show you on a daily basis. Here's the VIX. Let me change the interval. We can, this is as an example. Here's the daily. We're at 70. We were in euphoria, so the VIX pulled back and the market bounced. But here's the ESU. Let's put that on a daily. See, it's still below its mean. Its mean is at 54.62. It's not in panic. It bounced a little bit, but it was just a dead cat bounce. I'm sorry, Gracie, right? She don't like that expression. Gracie's a calico too. She's a money cat. She loves to, and I let her do it too. She gets on my desk and rubs her little body all over my screens, and I'm totally okay with that because a calico, they're money cats. She loves sell-offs too. So that never hurts. All right, an hour. I don't know. We covered some ground. I hope I stimulated some ideas. If I can answer any questions here in the last minute or two, I'll wait, right? You're on delay, so I'll wait a few minutes and we can look here, but this sucker's going down. And just before we came on, we went in, our members are listening, they saw it, we placed an option, big fat option on the S&P. We'll look at it at the end of the day, but we'll look at it on the closes. We absolutely did. So we can trade options, but when we're trading intraday with futures, we're trading, with surgical precision. But this is what you're up against in terms of our members have these tools on their desktop. And oops, where'd all that stuff come from? Oh, I see. That was my writing earlier. But isn't that, do I still have? Yeah, this is the Bitcoin. That's the Bitcoin. Do you want to see the ES here? Let me just show you the S&P too on a monthly basis, right? I hope I don't, upset anybody when it comes to Bitcoin. I know there's a lot of passion behind that, but when you get passionate about any kind of investment or any kind of monetary thing, you might want to just, have a self-check on that. Honestly, because you're not the first person to get, oh, these are weeklies. This is a weekly, by the way. This is a beautiful view. This is the weekly. You tell me that's not headed down. This is the S&P on a weekly line break. This is where we put, we're down, man. We're down. We're going after this area here, which is 50.64. We take that out, we'll be down into here. That's 4,800. And then if we ever take that out, but let me show you this on a monthly basis. And we teach you all these different charts so that you get a different view. And I know people love charts, but we love our radars too, because they do all the math behind it. And so you don't have to do too much thinking. So watch this. This should, it's not going to scare you guys, but it should scare the retail public. All right, here's 1999, right? This is the bubble. This was the 08 crash. And I got to tell you, folks, we were not exposed to it in a big way. We weren't. We were already out. Trust me, we were out. But it was staggering. A bear market, right? In 9 months. This is the S&P. And then, and that includes, the 2001, 9/11. And then we just do this. This is from, 2001 to 2008. And see this debacle here? Do you see that? That is the worst crash ever. That's 2008. That was worse than 1929. That was the recession to end all recessions. It was awful, awful, awful. Nonsense. It was nothing. It was nothing. I mean, I hope you didn't get hurt in it, but it really wasn't much. And then it stopped. I can say right here, and we can drill down. I can drill this down right down to the day and the time when the computers turned on. And then you can say, well, what was it? And again, they changed the banking laws, and then they launched QE. This is where they launched QE. Then we pull back. They did QE2, QE3, QE4. This was Operation Twist. This was COVID. Then they did QE again. They locked down interest rates. And then they put money in people's pockets and told them to stay home. That created shortages, did two things, but do you think Harris, I'm sorry, even Donald Trump he probably can, but do you think Harris has any understanding of this? Or do you think that boob she just picked has any understanding of this as a VP? I mean, come on. So they pumped money. They 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 kept interest rates locked down here. This is the scam. They changed the laws to force all new hires in the United States that join a company, they're forced to go into their 401ks. They have to go to the HR to get out. So they have to that was not always the case. So they have to get in. They lock down interest rates so that the people who are retired in Vero Beach, who have saved a couple of $1 million, can't make any return. They force them into the stock market. Then they explained to all the CEOs, look, we're gonna lock down the interest rates forever, and we want you to buy back shares, and so they buy back shares as opposed to build new plants and hire new people, and they enrich themselves beyond belief. You know what? I probably would have done the same thing. And then we're gonna buy the bonds. Now I think Bernanke, I think he wanted to get out here, but he quit and he turned it over to the Marxists and the Socialists. And the Marxists and the Socialists says, well, what a great program this is. We can, what we can do here? We could have a Marxist revolution here in the United States if we just keep doing this QE bullshit. And that's what they did. And then COVID comes in and totally upsets the apple cart. So they said, well, what are we going to do? And they started up here, by the way, before COVID, to increase interest rates a little. Then what do? They lock the interest rates down again. And then they tell everybody to stay home. You don't have to work anymore. And we're going to give you guaranteed basic income. So go hit the beach, play hacky sack for a couple of years, and everything's going to be fine. And we're going to pay off all your college debt, and we're all going to be rich, and nobody has to work anymore. And we can all smoke weed. And, do you see Massachusetts is thinking about legalizing mushrooms? Lovely. Lovely. And stay home, play games. And this is where we are. And people want to know, all we did was this. Oh, we did a little bit on a monthly basis. This is all we've done. All we've done. Now, do I not know if we're going to keep going? Yeah, we could keep going. We could keep doing this. But at some point, the end game, and why I've said the Federal Reserve has done this, they have flown, and I'm not on the plane. I hope you're not on the plane. But the Federal Reserve is flying this plane. They are academic stooges for the banks. They're taking the country for a ride. Okay, the people, if you have an IRA account and you're in this market and you don't understand this, you're on their plane. They have flown that plane into what I call a financial or a market box canyon. You take a little plane and take it up in the air in Denver, fly into a nice wide valley, and then start to climb the Rockies. And you go up and you go up and you go up. And you're in a canyon. The walls of the canyon narrow, 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 and you don't have enough velocity anymore. You can't get over the top. And you go to turn around. And you don't have enough room to turn around. They can't. Well, people said they can't get the bitch any higher than here, and they did. Can't get the bitch any higher from here, and they did. Can't get the bitch any higher from here, excuse the French, and they did. Can't get it higher from here, and they did. Can't get it higher than here, and they did. This certainly is the end. Nope, they can get the bitch higher, and they did it again. So you might rightfully say, you know something, Don? I see and I hear and I understand all that, but you know what? We come down here, they're going to get the bitch higher again. You know what? Maybe they do. And if they do, Susan and I and our members are going to do just fine, because we're going to ride it. We're going to play, but we're not on the plane. We're not on the plane. We will have, and our members will have, a front row seat when this son of a bitch does roll. And it will roll. And it always ends in a crash. They won't be able to turn it around. And that, now, is this the one? You know what? If you bet on those and you bet that type of thing, on a monthly basis and you're, going to get short for the big one and everything, then, not a good idea because you could lose and lose big. But this is the enormity of what's happened. And what this move did, the governor here is where they screwed up. See, they enriched themselves and they enriched the billionaires and they enriched the power class. But when they did COVID and they told everybody to stay home and play hacky sack, and then they gave them guaranteed basic income, they created inflation. That's the problem. That's the other side of the canyon. So if they do it again, the McDonald's Happy Meal is going to go to $150. Do you know, I looked at ordering Susan for her birthday. She's from Cape Cod. I was going to order some lobster rolls from Goldbelly. We used to, when we were, kids in college, whatever, we'd get lobster rolls on Cape Cod on her birthday. So I was lobster. I thought I'd treat it to it. We used to get lobster rolls for like $4 or $5. Do you know on Goldbelly they were on sale? You could get 4 lobster rolls, free shipment for $160. Isn't that something? Isn't that sweet? How long do you think that game's going to play out? That house in Boston, and I'm picking on the Boston market because it's the 3rd worst extreme in the country. And it's also ground zero for all this wokeism, all this free money, free ride. We're all gonna be rich. Sure. That house up in Boston, that 1,900 square house is 740 grand. The household income necessary to get in that house and maintain that house is 188,000. Okay, sure. When this creates what they call a wealth effect, the spirit walks up the spirit animals. And so the reason why they couldn't really quell inflation is that everybody, and it's interesting that, that let's go back to where is that little bugger? Airbnb. What people did was they just borrowed against their house, against their second house, so they were supposed to slow down their spending and they didn't. They just kept doing it. So the inflation has remained stubbornly high. But when it does slow, the companies will be the first ones. Their revenues will slow, their earnings will slow, and then they're going to kick people to the curb. And the bills are going to come due, and they're going to be unemployed, and they're not going to be able to pay them. That's the reality of it. And you have no one to thank but the Federal Reserve and the Marxist engineers from MIT and University of Chicago that created this debacle. And I include George Bush in this too. When it blows and it craps out, they will not admit that it was them. It will be someone else. And if the Marxists are in power, they will remake the game. And we will play the game from where it starts. It just doesn't, But it is telling. Where is that? Where did I see? Let me go get it. That Airbnb. I think that's very, very telling. That of the recession. I would have, what's sentiment gauge? Is it here? Let's see. That may not. We got it on the NASDAQ. We should have it in here. Airbnb. I don't even have it on the NASDAQ. Well, you'll see it in your I'm just sorting for it. I don't even have it in here. Airbnb. But I think it's very telling as you want an economic indicator that folks, and if you got a second house or a third one, or you got 5 of those things and you can't rent them out, well, then what are you going to do? You're going to try to sell them. And if you can't sell them, let me just show you too. Here is the S&P, excuse me, moving you around. I don't mean to make you dizzy here. I do want to show you, where is our, I hope I didn't lose it here. We can always put it back in. Oh, here it is here. Nope, excuse me. We're going here. It's the ETFs. We're going to keep going. Here's the S&P. So this is Swing Machine on the S&P. And here, this is the signal coming through, and this is the number of days. So we can pull up here, we can sort, and like these stocks are getting short. Please don't go short them, but these are all the signals coming through in the last 2 days, long and short. Tesla shorted 2 days, 2 days ago. So it's on its second day. And if you had shorted it, you're up 2.25%. We can also sort. We did this the other day. Here's all 500 stocks. This is the stock. This is the interval. You could do a weekly. If you wanted to be a weekly, you could do it a monthly. Then this is the signal, either long or short. This is how many days the signal has been in it, long or short. And then this is the purse based on a $10,000 investment. So this is up 7,979 GE of all things. And what is the percent return? 79%. Here was the entry price. Here was the date. And this gives us the trend information. Now, just stay with me. We're long and short all these stocks. How many stocks are we profitable in out of 500? And how many other people are prepared to show you every single position on the S&P, how they're positioned, how much they're up or down? Now, if you think you can do this with moving averages, have at it. This is low for us. We're at 380. Usually we're around 450, but the yellow ones are flat. So been kind of a choppy market. Out of 500, we're either profitable or flat in 391. The rest of them, we are in fact having a drawdown. But what is the worst drawdown on a $10,000 investment? Newell at 16%. The reason being is this machine doesn't have an ego. It's not trying to be right. It doesn't give a shit. It's not greedy. It's not fearful. It will kick out the losers and it will hold on to its winners as long as the facts are the facts and as it's defined. Retail traders make their decision on money, greed, and fear, and that's why they don't make any money day in and day out. They may make a hit here or there. Make sense? Folks, I got to wrap up. We got a lot we got to do. I want to say thank you. I kind of rambled on. Be sure to visit the site. I'll bring you back to Swing. It isn't the only tool. It's a blast. And you can see these. I mean, we're just trying to show you what's possible. We have an unlimited number of monthly members available. You'll get a video view. It's month to month. Try, see what you see. If you like it, stay. We keep, we have very, very high retention of monthly members. The annual, think about it. Send us your questions. That we only have a limited number of seats, a limited number of licenses. And for the last 3 years, we've had to close the door at November 1. It's twofold. One, we can only support so many people. And two, I don't want to pay so much in taxes, quite frankly. All right. So, all right. Thank you. And I'll sit here for a couple of minutes and then we got to shut down. Thanks for coming by. We'll do another one on Friday and see where these markets are. Thanks for stopping by, everyone. Have a good rest of the day. See, I love to monitor. I'll have to check in with Davey Day Trader, see if he's choking on his longs that he put on the other day. And he likes to step in large, like with $1 million or two. When he's done and out of the way, that's, then we can probably get around to investing. They need to get a can of whoop ass, and they will get it. If you're buying the dip in an uptrend, no problem. You can buy the highs, no problem. When the market's making new highs, everybody's a genius. When you're in a downtrend and you keep buying the dips, you're going to lose a lot of money really, really fast. And if you average down, you're going to lose it really, really fast. In a downtrend, you sell the rips. You don't buy the dips. Have fun.